Insurance companies have exactly 1 week to meet the new minimum capital requirement set by the regulator. Now, the NIC revealed that most insurance companies have recapitalized ahead of the 31st of December this year deadline in meeting, the said requirement. Now, the regulator announced the new rates in 2019 and extended the deadline to the 31st of December this year. Now, both life and non-life insurers are expected to increase their capital from 15 million cedis to 50 million cedis. But what are the options available to companies which are not able to recapitalize? Insurance expert Larry Jage joins us via Zoom with more. We're grateful, sir, that you could, join us. First of all, for you, do you think that insurers have an ample time to meet this set requirement?
Good afternoon, and good afternoon to your listeners. Let me indicate that the 15 million is just for the life and general insurance companies, right. But the reinsurance companies have a higher limit. I think that is around 250 million. They will have to meet that. As indicated, the indications we are getting so far is that almost every company has been able to raise the capital to the minimum 15 million. We don't have any clear indication at this stage that some companies may not be able to meet the minimum capital requirement. The options are that failure would attract has been prescribed by the regulator. They are very specific about the regulatory actions they will have to take in the event of any company failing to meet the minimum capital requirement. Some of the indications are to the effect that you look for another company and merge with them immediately, or you will be barred from accepting any new businesses. You would also may be prevented from renewing existing businesses on your books. And then also, you may be stopped from varying any existing contract you have. And then you cannot even go out there and look for new or prospective clients.
Interesting.
You cannot recruit new staff or agents. And then you cannot dispose of your assets. All these indications are prescribed in the Insurance Act. These are not administrative measures. The law is very specific and gives the necessary powers to the regulator to implement the indications they have given to the market so far. You must recognize the fact that the process towards the new capital levels have been ongoing for almost 3 years. It has been ongoing for almost 3 years, and every company or regulated entity has been given enough time to raise their capital. If you fail,
from the regulator and ensuring that policyholders are not affected by this.
Yes, immediately. What the regulator can do within the ambit of the law is to transfer existing clients to another company. And that is also provided for in the Insurance Act. Another indication is possibly to get a strong, financially viable company to take over the operations of the regulated entity immediately.
All right.
The companies may not really be negatively affected.
All right, great. But with the proposed capital, are you confident that insurance companies will be able to undertake big ticket risks?
That is the objective of this whole measure. Our economy is changing. We are now an oil and gas economy. We have a lot of foreign prospects also coming into our market. If a company it's not properly capitalized. What essentially would be, that would mean is that the company will just be acting as an agent for foreign insurance companies. They carry the business on their books and then give most of it out to reinsurance companies outside the country.
Indeed.
So the objective is to retain premium in our market.
Okay. All right. Larry Jagger, we're grateful that you could join us, an insurance expert in that regard, helping us understand the implications of recent reforms by the NIC regarding the recapitalization of its members.